Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Happy Friday. We have stocks trading higher. The S&P at an all-time high, the NASDAQ pushing there towards its record high, Dow at an all-time high. Russell's lagging a bit, but the Russell has a constructive technical pattern, a little bit of an inverse head and shoulders over the past couple months, and then it sort of broke out of that a few weeks back. The pullback is sort of building a little bit of a bull flag. It's a bullish setup in the sense that as well, that pullback middle of the week held the 50-day moving average in a very constructive manner. So the Russell could be that last component and really adding a tailwind to the markets broadly. The S&P holding out above 3,004, 3,006 is bullish, and now we just got to get that confirmation close on the NASDAQ, which it has not done the last 2 days. We talk about this in more detail in the Morning Express, as well as give you our levels and upside targets upon this close on a breakout. So take a look at that. It's in there this morning. Moving on to crude oil, it's holding very well. It's holding the $60 mark. Now we have some support levels to look at. We talked about where to buy, and then where we have a rare major 4-star support level, our line in the sand for this breakout bullish trend in crude oil. So take a look at that as well. Overall, we're targeting with first key resistance 61.5, and then a major 3-star level out above there. But this our buy targets are below, so keep a close eye on all of that. Very constructive pattern in that it's holding. However, fundamentally a little disappointing given some of these tailwinds you see. You got the Storm Barry coming through. You have Iran tensions, as well as a bullish EIA report. But we're not seeing prices higher. The IEA put out their monthly report today. It was poured a little cold water over the market action, but generally speaking, of good technical action, and then line in the sand, rare major 4-star support level is what you want to be buying into. So take a look at it at the Morning Express. And then lastly, taking a look at gold. Gold is holding constructively. It's not doing what we really want it to be doing in order to be outright bullish or more bullish. Now, we are long-term unequivocally bullish gold, and we've been very vocal on that, but in the near term, we did say we neutralized our bullish bias after the failure to get out above 1432. So we're pulling back. It's range bound. You do have some conflicting fundamentals. You're seeing rates come off their lows as the Fed rate cut expectations waffle around. Now, we had Chicago Fed President Evans spoke today saying that the policy currently is a little restrictive. He's saying he sees 50 basis points before the end of the year. However, the market is pricing in as much as 75 basis points at a 50% probability before the end of the year. So the question is the market pricing in too much? And we tend to believe that. We talked about that in the Morning Express today. So what does that mean? It means that the Treasury yields have a little bit of room to rise, and that's been a narrative of ours over the last week. And we've been able to capitalize that here with our traders on the desk. But give us a call if you want to talk about that. But for gold, the dollar is been constrained, and it's trading in a range. That's supportive to gold, just as long as you don't see rates jump up too much. We like gold. The technical pattern needs to remain constructive, and for it to do that, we need to see closes tethered to 1408 at worst, and then intraday pullbacks hold 1400 to 1403. And that will lay groundwork for higher prices. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us at info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.